Hi, Greg Lewis, MetaStock Software. Hey, you're about to watch one of the great presentations from our recent Online Trader Summit. I know you're going to enjoy it. If you do not yet have MetaStock, make sure you visit metastock.com/traders-summit 3-for-1 for a great 3-for-1 offer for MetaStock plus market data. Also, make sure to listen to Jeff Gibby at the end of today's presentation. He has a really great offer. It's very exciting, and I know you're going to want to hear it. Finally, make sure to leave us some feedback. We always want to hear your feedback, and subscribe to our YouTube channel. Thank you so much, and successful trading.
I do want to say, first of all, thank you for coming. I also want to say thanks for Stocks and Commodities for sponsoring the Online Traders Summit. They're a great magazine. By coming today, and I'm going to paste this into the chat box for you, but by coming today, you're going to be able to get a free issue of Stocks and Commodities magazine. Fantastic magazine. They've done like 17,000 articles. They've been publishing since 1982. There's a little bit of a link to get a free issue. I'll send it to you in chat in just a second here. Okay, and of course we're hosting it. It's MetaStock, and let's get straight to Steve Bigalow. Steve, we can hear you.
Okay, Jeff, I need the screen to show where it makes me the presenter.
I'm sending it to you now. I want to talk to you a little bit about Steve, though. You should have that control coming. Steve is one of our most valuable partners. The product, we've designed products together. We've been working with each other for probably close to half a dozen years by now. And
all right, I apologize, everybody, for my normal glitches. Anyways, I've been doing candlesticks for, I guess, getting on 40 plus years now. And what I've discovered, and Jeff, let's do a quick survey. I wanted to find out how many people have seen my presentations before. Yeah, obviously a yes, a Y for yes and for no, just so I can see what percentages.
I've seen about 1, 2, 3 no's, 4 no's, and about 1,000 yeses.
Okay, all right. So I'll probably have to be able to go through pretty quick then. So what I discovered, and this is why it's been nice working with MetaStock, is there are signals and patterns that occur time after time because of human nature. And I always start my presentations by saying that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So the candlestick analysis is merely the graphic depiction of what occurs in human nature. So there are about 50 or 60 candlestick signals that the Japanese race traders have illustrated to us over the last 300 or 400 years. And I always want to stress that the Japanese race traders that started candlestick analysis did not become wealthy. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries, and they did it on the most basic commodity in the world, and that was rice. So there are about 50 or 60 candlestick signals that they have shown that there's been a change of investor sentiment. But over the years, we've been able to narrow them down to the 12 major signals. The reason we've narrowed them down is back when I didn't have anybody to converse with to get second opinions, I would study every single chart, every single reversal on past charts, and these 12 signals kept coming up probably 99% of the time. So I always advise people, you might want to look at the other 50 or 60 signals, but if you learn these, you've got two great benefits. One, you will see there's a high probability reversal occurring in investor sentiment. And two, the Japanese race traders through the centuries have had enough time to be able to describe what's going on in investor sentiment to tell you what those signals are representing. So once you see learn a candlestick signal, not only will you recognize the reversal, but you understand what the reversal information is telling you. Gives you a pretty good grasp on analyzing the markets. Now, if you apply those signals to patterns, again, investor sentiment works the same way time after time, that there are patterns that represent high probability trade situations. So a lot of people ask, well, what stocks do you trade? The nice thing about doing scans is you can set up your own trading universe. If you're somebody that likes to trade $1 stock to $5 stocks, you make that your universe. If you're somebody that only wants to trade options, you just use the optionable stocks as your universe. But no matter where you're trading, candlestick signals produce setups that are extremely high probability reversals, telling you there's a new investor sentiment coming into a trend. For example, there's about, I don't know, how many do we have, Jeff? Around 14 or 16 scans with MetaStock now that show you the best possible trades. The best one
19.
19, okay. I put in here as what we call our best friend, which is essentially a doji followed by a gap up. Now, what this does for investors is not only illustrate that there's been a dramatic change of investor sentiment, because we know a doji represents indecision, but when there's indecision, especially in the oversold area, and they gap it up, that tells you two things. It tells you not only has there been a change of investor sentiment, but that investor sentiment is extremely has an extremely powerful change of direction, which not only does two things for you. It tells you what the new direction is, but it also tells you that there's a high probability that that new trend is going to produce big profits. We've got signals. This is what we call the belt hold. And you can see, or you should be able to see, okay, for those few people that put the ends in, candlestick signals are created by a much greater degree of what's happening in investor sentiment on any time frame basis. That if you see the open here and closes above where it opens, you get a bullish candle. If you see it opens here and closes here, you get a bearish candle. Now, that doesn't necessarily mean you're up or down for the day. You can notice right here where they opened it here and closed it lower, but they were up for the day. The belt hold signal is a very relevant signal in that the Japanese rice traders describe it as two sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt and pulls him back in. You got a very strong uptrend. That's the Japanese rice traders' description. The reality is something has knocked all the sellers out of this trade, and the bulls stepped right back in, basically sopping up all that selling, which means any buying from that point has very little selling in front of it, and it usually creates a very strong uptrend. But what we're kind of looking for, if we're looking for the best possible trades, this past week we recommended RYAM based upon a doji. Look, notice where the doji occurred. Right smack dab on the 50-day moving average. Stochastic's curling back up, and it closed back up above the T-line. Guess I better backtrack again here a little bit, Jeff, that what you'll see on my charts is this blue line is the 50-day simple moving average. I think the gray line is the 34-day exponential moving average. And then on a lot of charts, you'll see the red line, which is the 200-day simple moving average. Now, essentially what that is telling you is we're not using the moving averages to make our decisions. We're using the moving averages because the candlestick graphics allow you to see exactly what's going on in investor sentiment at levels that everybody else has on their charts. The 50 and the 200-day moving average is on every major money manager's chart around the world. We have the advantage of being able to see exactly what those decisions are at those levels. Now notice what's happened here. We had a doji gap up. Now common human emotions are, man, I don't want to buy a stock that's already up 3, 5, 10, 15, 20%. If you know what's happening with candlestick signals, instead of deciding not to get in, you're getting in aggressively because we know what the expectations are after a best friend signal. Strong upside. Now on Friday, yeah, I thought I had one from Friday. We also have other signals. There's your morning star signal. Right smack dab on the 50-day moving average. And right here at the in the oversold area of the stochastics. Notice where it closed. It closed at the T-line. I forgot to go back. The T-line is our 8 exponential moving average. We call it the T-line because it's the trigger line. Very simple concept. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So you want to be a buyer when it looks like it's time to buy and it closes above the T-line, which is exactly what this chart was illustrating. So here's just very simple logic, that if we know that the probabilities are extremely strong, if you see a candlestick buy signal and a close above the T-line, you're in an uptrend. And we can see that there's a buy signal occurring right smack dab on a major support level. Tells us if it opens positive, our probabilities of our next wave to the upside is extremely strong. Because of that, the T-line rule. So what do candlestick signals reveal? They basically reveal when there is a reversal in investor sentiment. This morning star signal is not an arbitrary signal or pattern. It is something that the Japanese rice traders have identified for hundreds of years. But if you see a Morningstar signal in the oversold area and a close above the T-line, you want to be buying on bullish confirmation. Now, when I say bullish confirmation, very simply stated, what do we want to see if we see a candlestick bullish reversal signal? We want to see the bulls are still there. If it opened the next day down here, what's that telling us about the bulls? They're not there. You don't get into that trade. Here's another one of the major signals, a bullish harami, an inside day in Western terminology. Harami in Japanese means pregnant woman. There's her body and there's her little belly sticking out. And it tells you that the selling has stopped. So if that tells us the selling has stopped and we're right smack dab on the 50, that means somebody out there was buying right on the 50-day moving average. If it opened positive the next day, we don't have to sit around waiting. I always have people ask, well, how many days does it take for your signals to confirm? The answer is 0. This is the signal. If it opens positive the next day, you want to be buying because that is the confirmation. So if we see something like this, we know we have an extremely high probability trade. Not only that the selling has stopped, but they gap it up the next day. That's basically telling us we've got the probabilities that there's going to be a very strong uptrend after that. Bullish harami. This was Thursday, a bullish harami in square. Now notice where we bought square the first time, right in here. There's our Morningstar signal, smack dab off the 50, starting a very strong uptrend. We could see the sell signal, time to close out our position. Now we've got a bullish harami that if it opens positive, what can we kind of calculate on this chart? Wave 1, wave 2, going into wave 3. So we can see what investor sentiment is at obvious support and resistance levels. Big bearish engulfing signal. What's our added analysis to this? Look where it topped out, right smack dab at the 200. That's not a coincidence. That's because everybody that was watching this trade or in this trade said I'll probably take profits at the next resistance level, the 200. Where are they taking profits? That's the advantage of candlestick charts. They can show you immediately what the graphics are of candlestick signals. I'm sorry, the candlestick signals show you exactly when the sellers are starting to take control. So if I got something like this is what we call the bearish flutter kicker signal. We had the potential of a J-hook pattern. Again, they came back down to the T-line and started back up. Let me go back again. 50-day moving average, 200-day moving average on every major money manager's chart around the world. The 34 seems to work effectively, but the T-line is probably one of the most reliable trend indicators that you're going to come across. So I tell people, don't take my word for it. Just put the 8 exponential moving average on your charts and see how well they work by you're in an uptrend as long as you stay above the T-line, or you're in a downtrend once it comes back below the T-line on a sell signal. I guess the most important, realization is that the 200, the 50, the 20 are all magnets because everybody's watching what's happening at those levels because everybody has those on their charts. Nobody statistically has the T-line on their chart, yet it works extremely effectively. That puts it into a category of being kind of a Fibonacci characteristic type support and resistance, where it's a natural support and resistance for human nature. So the logic of all this is, if you've got the graphics, the candlestick signals that tell you exactly what's going on in investor sentiment, and you apply the T-line, which is a Fibonacci natural support and resistance level of human nature, you combine those two, you've got a very strong calculation or strong evaluation of what's happening in investor sentiment. So a bearish flutter kicker, just think of the rationale of this signal. You're in an uptrend, and they have enough strength to gap it down below the previous day's open and do a doji day. Well, we have a simple rule of the doji, which is prices will usually move in the direction of how they open after a doji. If they open it and they start trading lower, we've got a bearish flutter kicker. Why do we call that a bearish flutter kicker? Because if you took this little flutter out of here, you essentially have it opening here, closing here, gapping down, and going the opposite direction. The kicker signal is your strongest candlestick reversal signal as an individual signal. Now, a lot of people ask, which ones are the best out of the 12 major signals? Well, we've already kind of pared it down a little bit to tell you that the 12 major signals are lost my train of thought. The 12 major signals are already telling you that these are probably the best signals out there. So you want to learn all of them. There's only 6 bulls and 6 bearish signals you have to learn. So learn all of them because they're all going to be effective. Again, here's our best friend signal, a doji gap up. Produce an extremely high probability bullish trade. Bullish gap up. What do you want to be doing? If it opens positive the next day, you want to be buying immediately. A bearish gap down. That's your bearish best friend. What do you want to be doing after that? If it shows weakness, again, you're going to be going short. Now, entry and exit strategies are very simple because the candlestick signals show you what's happening in whatever investment entity you're trading. You can analyze the conditions of the market very easily. So if we're anticipating that there's been a reversal in the market heading down, and we can see the next day it's the pre-market futures are telling us it's opening lower, and we see this one opening lower, that's going to be strong confirmation that you want to start going short. This is not rocket science. This is just common sense application of investor sentiment put into a graphic depiction that the Japanese rice traders haven't developed because of computer systems or computer results. It's because of 400 years of actual trading that we're seeing what happens in investor sentiment. Because of that, we can scan for the high probability candlestick signals and patterns. We know that a fry pan bottom is very easy to identify. It looks like a big fry pan bottom. And there, look where it's breaking out. Right as this pattern is developing or started, we have what we call a doji sandwich. That's a big candle, a doji. And remember our doji rule, it's going to trade in the direction of how they open it the next day. So you have another big candle. That's our expectation because we got that little doji sandwiched in between. And we have expectations of a doji sandwich, more upside. We have expectations of a fry pan bottom breakout, more upside. Now, I say more upside. The prospects aren't a nice little steady uptrend. The prospects coming out of a fry pan bottom are going to be big price moves. So essentially what's happened in our visual graphics identifying human nature is that we can see that this is the same type of situation that's happened time and time again to produce a big profit. So I tell people, you don't have to be a high-tech, sophisticated technical analyst. All you have to do is be able to see, and I always illustrate that in the with the old couple getting ready for bed, and she's standing there naked in front of the mirror, and she says, "Look at me. My face is wrinkly, my arms are skinny, my butt's scrawny, my legs are spindly." And she turns around to her husband and says, "Is there anything you can say about my body that would make me feel good?" He goes, "Well, your eyesight is still pretty good." So as long as you can see, you can make good money with candlestick analysis because it's not formulas. It's not identifying high resistance or support areas. It's showing you exactly what investor sentiment is doing at technical levels. So if I can see a pattern setup, I know the ultimate time to be thinking about buying is when they break out through the beginning of that pattern. So this is ultimate buying where, notice what we have here, kind of a double doji sandwich that broke out through this level, indicating we were going to have more upside. So if I'm a stock trader and or an option trader, I'm watching to see what happens right here. Now, I probably brushed through it too quickly when we started. If you see a candlestick buy signal in the oversold condition, the Japanese rice traders tell us that's a high probability trade setup. If we see a candlestick sell signal in the overbought condition, that's a high probability sell signal that tells us the trend is probably heading down. So seeing a candlestick buy signal in the overbought condition doesn't mean very much. Or seeing a candlestick sell signal in the oversold condition doesn't mean very much. So a signal is a signal if it's occurring in the right conditions of the markets. So what we're looking for are pattern setups, fry pan bottom, breakout. We've just reiterated a buy on PETQ because this is what we call the classic pattern. What do we expect coming out of a fry pan bottom? A strong price move. What do we expect after a strong price move? Consolidation, and then the J-hook pattern. That combination is a very high probability setup. So if we were buying in here, we can also be buying in here. So remember, we just said you want to see a candlestick buy signal when your stochastics are in the oversold area. usually with a candlestick pattern, your stochastics are going to be closer to the overbought, if not in the overbought area. So the benefits of identifying patterns is that they produce expected results, like the J hook pattern is that strong price move, the pullback, and then a J hook. And we have expectations of a J hook, that if this is wave 1, wave 3 is usually the same magnitude as wave 1. So what's that do for us? First of all, it gives us the ultimate timing. We can either be buying here with the anticipation that when it gets back up here, we can be buying, because if it breaks out, we've got a J hook pattern. If it fails, all right, we've got a little bit of a profit, but we have a double top, close out the position. Or at this level, if we're deciding to buy, that's the ultimate time to be buying. Now, notice what it did on this day, another little doji. So what would happen if it opened positive the next day? We want to be buying immediately, because what would we have? Probably a little doji sandwich breakout telling us we've got more upside, and we can calculate that if this is wave 1, here's wave 3. That gives us the prospects of either buying the stock or buying calls, or if we can calculate where the upside is, putting on put spreads that might, or I'm sorry, call spreads that might have much higher probabilities of bigger returns. So here's our scanning technique, is identifying the J-hook pattern. Where's our logical breakout area? Obviously here or right here, which would coincide. Gives us a high probability setup for when we want to be buying. So there was our anticipated breakout. Again, the stochastics are up here versus a buy signal down here in the oversold area, but this is a high probability trade setup. Wave 1, wave 2, going into wave 3. So I didn't give Jeff enough time to tell or kind of illustrate how often we've worked together now for I forget how many years, but they have a very effective scanning technique based upon formulas that we put together that we can identify, or it's already identified for you in their scans, for the high probability patterns, like the Bobble pattern. This is a pattern that is a J-hook pattern. It is much more refined. First of all, your initial move is up to a resistance level, and it fails. Then the price retraces back to a support level, usually back to the T line. All we have to do is watch to see what happens from the T line, that if they bounce up and they start approaching that first resistance level, we watch to see if it breaks through that resistance level, because essentially what's that telling you? So you have a J-hook pattern where you can see where the exact breakout is occurring, and it gives you an extremely high probability trade setup. So if this was our recommendation on Zan a few weeks ago, there was the failure up here at the 50, pulled back right to the T line, came back up through. You can see what was setting up, a J-hook pattern coming up through the resistance level. We were buying immediately. Where was our upside potential? Hopefully up. So I always get people, how do you get into these big high profit trades? We don't have any idea how big this trade's going to be. All we know is that the probabilities are extremely strong that you're going to be moving in the right direction, because something's happening in investor sentiment that tells you they're still buying this one. And the candlestick signals and patterns put you in situations where we know the probabilities are extremely strong that it's going to be moving in an upward direction, and dramatically improves our probabilities of being in a trade situation like this, where it's up 200, 300% in a matter of a couple of days. Now, does that occur all the time? Definitely not. But the whole point of our investing is we want to put our funds someplace where we know the probabilities are greatly in our favor that we're going to make some good money. Oh, Jeff, I forgot to look. Do I go to 11 o'clock?
Yeah, let's have you go to about 10 to 11. 10 minutes to 11.
Okay, all right. Okay, so anyways, here is another situation. Couldn't have gotten into this, but when it pulled back and you could see it doing this, you could be buying. Why were we not buying here? Nothing there. Buying right here, what do we have? We already had our anticipation of a J-hook pattern. Same scenario. If you can see a resistance level, came up, hit the resistance level, kind of up in this area, then notice what we had right there, another doji sandwich. And what happens when it opens positive after a doji? The probabilities are pretty strong that we're going to be trading positive. If we're trading positive after a big up day doji, the magnitude of this candle is usually going to be the same magnitude as this candle. So if it closes up here, what's it tell us about our resistance level? We've broken through the resistance level. We're in the next wave to the upside. So these are the type of things that we have set up the formulas for, that all you have to do is see what happens when we hit the resistance level. So if we were a buyer down here, based upon our doji gap up, and then the next day they open up positive, where's our first target? The 50. If it goes through the 50, where's our next target? The 200. Well, what was the difference between that candle and that candle? Well, obviously, that was telling you the bulls are definitely in control. Up here, that told you, especially getting up in the overbought area, there was indecision between the bulls and the bears. That was a good time to start taking profits, with the probabilities that if it opened lower, they were selling it off. The worst case scenario would be is if it came back up through the 200, telling you it wasn't acting as a resistance level, you could be buying back. The fact that they pulled it back and brought it right back smack dab to the 200 makes it a very simple entry strategy, because if it opens positive, what's it telling us? That the J-hook pattern is working, the 200-day moving average is not acting as a resistance, our probabilities are pretty strong, we're heading up much higher. This is what we're looking for, is the setup. Human nature works the same way time after time. All we have to do is identify which one of those patterns are going to work with a high degree of probability, and not only with a high degree of probability, but give us the opportunity to be in a situation where our upside potential is much greater than just if we're in an uptrending market, just in a stock that's got a slow, steady uptrend. Same scenario. Failed up here at the 50. You can see what was happening. Every time they hit, the sellers are taking control. When they came back up the second time, told us there was more than likely going to be a strong move to the upside. This was, this is one you want to look for on Monday. Monday, yes. And if it opens positive, what do we got? A wave 1, wave 2, bobble breakout, wave 3. So again, these candlestick charts are merely the graphic depiction of what's happening with investor sentiment. And investor sentiment, the reason we see patterns in the markets or in price moves is because investor sentiment works the same way time after time, creating these recognizable patterns. So every time I put on a trade, a lot of people ask, well, where's your target? Well, I can kind of calculate where my target is by saying, all right, this has moved from here to here. That same price move would bring me up here. Is there anything up here that I can use as a target? Well, there's a gap up here. So maybe that's my target. Now, is that what we're using for our target? No. We're using the chart to tell us there's a potential target. That's where everybody else might be watching. We hold on as long as one very critical factor. Remember, we're buying and selling based upon the change of investor sentiment, the candlestick signals. Then we use our calculation to see where everybody else might be watching. That could be a Fibonacci retracement number. That could be support and resistance level. It could be trend lines. We have the benefit of seeing exactly what's happening at technical levels that everybody else is watching. The reason that Jeff usually puts me on first is because you can use candlestick signals. You're going to see a lot of good traders on for the rest of the day. If you take what they're doing and add candlestick or whatever trading method you have, if you add candlestick signals to it, you're going to see much more clearly what's going on in investor sentiment at the times that you're looking for support and resistance or breakouts. So because of that, I guess we're up to 19 high probability signals and patterns that are already formulated in the candles or the MetaStock scanning software. And this allows you to, instead of spending hours or even a half an hour each day, within just a few minutes of going through the scans, meaning usually each day, I tell people at most 20 minutes, you're going to find the best possible trades for the next day or the next time frame. I also should use the term time frame because whether you're a swing trader, a scalper, a day trader, or a long-term investor, candlestick charts work just as well on a 1-minute chart as they do on a monthly chart and everything in between. If you ever get lost as far as the definition of candlesticks, they are the cumulative knowledge of everybody buying and selling during a specific time frame. It doesn't matter what that time frame is. So with the scanning software or the formulas built into MetaStock scanning, within 5, 6, 7 minutes each day at most, you can find the best possible trade. So a lot of people will say, well, shoot, the other day we found 15 good trades. Another major benefit of candlestick analysis is that on any given day, the 7,500 to 10,000 trading entities that everybody's trading, you can find 3, 5, 10, 15, 20, 30 good trading entities each day or trading situations. That puts you in a situation now where instead of trying to find a good trade, you've got a supply of good trades that you can come back and cultivate to see which ones of those good trades are your best trades. And that's basically what we've done with candlestick formulas with the MetaStock scanning. So I guess about running out of time. Here's I guess Pat has set up we've done I forget how many minutes, 34 minutes of a video showing how to use the bobble pattern and the T-line crunch. The difference between a bobble pattern is that it comes up, hits a resistance, and then comes back up through, whereas a T-line crunch may just keep steadily moving up until the T-line crunches the price through the resistance level. So it's just a very quick and easy study on how to use the bobble pattern effectively. So another element that a lot of people ask was if there's so many charts to look at, how do I control having so many? I don't know what to do. And my answer to that is pick out 3 or 4. I use the fry pan bottom breakout. I use the kicker signal. I use the best friend signal. I can use the bobble pattern as 4 that I concentrate on. So if my scanning today says, all right, I've found 22 good trade setups, But now let me go through and see which are the ones that I concentrate on. The kicker signal, the best friend. All right, I may come up with 4. Now I can analyze those 4 much easier, because if I concentrate and become a master of those signals, I know when to be buying, and I know when to be selling, and I know what market conditions make them the most effective. So I guess in this little $17 video, I think you also get a 30-day free trial to our website. Each day we have a chat room open, which has 2 benefits to it. If you're learning candlesticks, you get a lot of information in there of people describing signals and telling you, or at least describing why they work well. On top of that, you're getting a lot of good trade setups, because people that have been experienced at looking at candlestick signals for a while have identified them and put them out there. Also, I put out 2 or 3 stock picks every day, and it's not so that you have picks. It's we do a 2 or 3 minute video each night saying which way we think the market is going and which stock charts have the best pattern setups for the next day. It's done in a video format so that you can continue to analyze or learn why those signals are working like they are, or why they're recommended. So I always illustrate that you don't want to just put out picks, because if people don't know why you're putting them out, you don't learn anything. It's like the cop that's standing on the street corner. He sees this drunk weaving down the street in his car, blows his whistle, pulls the guy over. When he walks up to the car, he sees there's a penguin sitting in the back seat. And he says, "What you doing with a penguin in your back seat?" And the drunk said, "Oh, I found him out on the street and I don't know what to do with him." Excuse me. The cop said, "Well, take him to the zoo." The drunk said, "Okay, I did think of that." So the next day, the cop's standing on the corner, and this drunk comes weaving down the street, blows his whistle, pulls him over, walks up to the car, and there's a penguin sitting in the back seat. And he said, "I thought I told you to take the penguin to the zoo." Drunk said, "I did. He liked it so much, today we're going to a baseball game." So if you don't understand why you're doing something, it doesn't do you any good. So candlestick analysis, no matter what trading program you're trading, I trade candlesticks as my top priority, because I'm seeing exactly what's going on. Then I can apply everything else that everybody is watching. The support and resistance levels, Fibonacci retracement, Bollinger Bands, anything else you want to add on that will improve the probabilities of creating good returns, you can add on. And because we know candlesticks work, or they wouldn't be around after 400 years, if I have somebody else says, "Oh, you ought to add this to your charts to see," because it works, well, I can throw it on there. If it works, I can keep it there. If it doesn't, I take it back off, because it's I can still use the candlestick charts to tell me what to do. So with that, Jeff, are there any questions out there?
Yeah, we have a couple. Earlier, Mike asked if you'll take a bullish signal under a T line.
Yes. Remember, the number one criteria is the signal itself. I'm trying to think, find something that would I be buying here? Yes, because that's my signal. Has it closed above the T line yet? No, not until the end of the day. But the number one criteria is the signal itself. The T line is the confirmation. Now, if I saw something like this, where I'm right at the T line, no, I might wait for it to close, because I'm not missing out on that much until I see it actually close above the T line. So usually, again, the further away you are from the T line, the higher the probability is going to come back up and test it. If I see a buy signal that's right there confirming at the T line, yeah, I'll wait for the next day to make sure it confirms. I'm not trying to. Yeah, I'm not trying to buy at the absolute bottom, and I'm not trying to sell at the absolute top. I'm trying to get that fat part with a high degree of probability on each trade, because the more correct, or the higher my correct trade ratio is, the much bigger my compounding effect will be. Okay, Jeff, what's the next one?
One more. Do you have a risk-reward system? I can't remember who asked that. It was a while ago.
Oh, I don't know what the risk-reward system would be. I guess my risk-reward system would be that anytime I look at a trade, I've got to calculate, all right, if this is a good signal, I'm in the lower end of my stochastics. I don't think my or if I can get through my 50, I'm going to my 200. Well, if that is a 7% price move, I'd rather be looking for something that has a 22% price move. So anytime I see a buy signal, I want to calculate whether it's worthwhile getting into that trade. Usually my minimum is 10%. Because the worst case scenario is, if it works, I've got a 10% plus move. If it doesn't work, at least I had the potential of making 10%. If I'm looking at something like Monsanto and it has a buy signal, and if I hold it for the next 2 weeks, I could be up 3.8%, that's probably not going to be as enticing to me. Now, there is, let me go back if I, wow. We did S-Sands. Can't remember which one it was. But when we did S-Sands, when it broke out of its Bobble Pattern, we knew the upside potential was like 30%. Now, obviously, that puts us into a little bit higher category of risk reward. But if the candlestick signals work, they work they work effectively on situations where you can make a much bigger profit potential as they do on a candle chart where your upside may be slow and steady, but again, it might be very slow.
All right. Thank you, Steve. I do want to spend just a minute actually showing you the product. And the question came up is, I know you started late. We only started about 5 minutes late, and we're going to be fine on time. So don't worry about kind of us being delayed. That's never happened before. Just kidding, it's happened. But I do want to talk a little bit about the candle profit systems for you. I do want to show it to you. It's been one of our most successful products, really. So what I did was I actually opened up a chart of, and one of our most popular, most successful products as well. So what I did was, this is just a chart of Apple. I opened it up today just to kind of give you an idea. And what we do with this product, I have a little bit of a slide to show you kind of the identified patterns that we currently identify. There's about 19 of them, if my memory and my math are correct. And what we'll do for you is we'll actually go in there and identify these on a chart. So let me swap back over to this chart of Alphabet, for example. What we've got here is you can see where these patterns have actually formed on this weekly chart. A few days ago, you had this T-line crunch, you had a scoop, you had a bit of a T-line crunch here, and it'll automatically kind of label those on the chart. You can see this fry pan bottom right before this dramatic move up. We'll identify those on the chart, and we can actually also explain them to you on real time. And you can actually apply them to just about any instrument that you want as well. If I wanted to go down and kind of show you what this looked on a daily basis, I can kind of do that. I'll go ahead and do that real quickly. Just a few days ago, we had a bit of a series of a bullish. Here you had a bit of a fry pan bottom and a slow curve. So they're all noted on the chart for you. The other thing that's pretty cool, I like it quite a bit, is I can actually highlight any of these patterns, and this commentary off to the side is going to tell you exactly what it is. So in this particular case, and I don't think I'll read the whole thing out to you, but it's telling you there's a 5-pan bullish pattern. This will say that it's a bullish pattern, captures the psychology behind price movement as a slow rounding bottom illustrates indecisive trading. So a lot of Steve's patterns, what he's looking for is indecisive trading followed by a decision. And he does a really good job of kind of identifying it. We'll tell you what to watch for when you're looking to trade for this. In this example, you're going to watch for any breakout indicators such as like a gap up, large bullish candle, a belt hold, etc., that creates the alert. It'll also tell you some advice on how to exit the trade. In this case, exited on any trading that closes below the trajectory breakout of the rounding bottom formation. So that's one of the things that I really like. There's a couple patterns that I actually really like as well. Like the Doji Best Friend is actually my favorite pattern in the whole product. And one of the other things that you can do, if I come in here to our power console, and we won't get too deep into the woods on this due to time, but in MetaStock, what we've got is we've got a scanning capability. And I can go in here, and I ran a scan this morning as Steve was kind of kicking off the presentation as we got him in here. I ran a scan for the Doji Dynamite pattern, which includes, if you hover over it, it's going to look for Doji at the top, Doji Best Friends, left, right, bullish combos, the series of Doji's bullish or bearish. And what it'll actually do is I send it through maybe 2,400 pre-filtered stocks that were selected because they had enough volume and they were in my price range. And what it's actually going to do is it's going to give us a list of stocks that we could look at on Monday. So if I'm looking particularly for Doji Best Friends, which is my favorite pattern in this thing, I could look at any of these particular stocks. I could add them to my watch list. I could go through and identify which ones I wanted to take a position in. It's very, very cool. This product, it took us quite a while to design it. And it's actually been rated one of the best add-ons by Stocks and Commodities magazine, not just for MetaStock, but for any product out there. And it certainly has been one of our best sellers as well. I show this product a lot when I'm on the road or when I'm traveling. And I always get feedback from people that are like, yeah, I love it too. It's a really, really good product. So I'd encourage you to try it. Again, kind of if I could summarize what it's going to do, and I'm out of time, it's going to help you find any of the patterns. It'll explain them to you on the chart. It'll tell you exactly what they're going to do. So it is designed to work with MetaStock. It's normally a one-time cost. The cost is $399. Here at the Summit, though, we're going to give you a $100 discount. It's $299 here at the Summit. You can order through one of our sales guys. The phone number is 800-882-3040. And I'm just really, really proud of this product. We worked on it for quite some time. We're going to have quite a few of my favorite products today. Steve Bigalow is definitely one of them. Coming up next is Vince Vora, Wendy Kirkland, Price Headley. And what I'm going to do for that is actually I've put together a special that's pretty insane, really. It's going to allow you to get all four of the add-ons. And these are probably my favorite add-ons for MetaStock. It'll include 3 months of MetaStock. It'll include 3 months of the Big Trend Toolkit. It'll include 2 years of Stocks and Commodities magazine, 3 months of MetaStock, a special boot camp that I'm going to go through on April 12th at 6 Eastern to kind of show you how everything kind of works, and a full course. If you bought all that separately, it would cost you about $4,000.87. Not approximately, it would cost you exactly $4,000. But we're going to do a Summit special today where you can get all of this. Most of it's included on a money-back guarantee. And you can try it all out for about $1,696, which is a discount of more than 50% off of the normal retail price. So we're going to kind of go through some of these products as we go today. But to take advantage of that, give us a call, 800-882-3040. If you're international or you would rather kind of chat with us to ask any specific questions, metastock.com/saleschat. I do see lots of questions coming through. I want to say thank you for those. I'm going to answer those with my microphone off and my very loud keyboard in just a second, because we really need to move on to the next presenter. Okay, but before we do that, I do want to say thank you to Stocks and Commodities magazine. They've done we love them. they sponsor, they help us advertise the event. It's a great magazine. I've subscribed to it for the whole 21 years that I've worked here. You can get a free copy if you go to bit.ly/2J41VSP. And I'm going to actually paste that in the link in just a second here in the chat. Make sure you sign up for that free magazine. The question came up earlier. We did have a lot of free bonus items that are available today. And how I want to tell you how those are going to work. So the way that that will work is for any of the bonuses that you've signed up for, you'll get an email from, let's say you signed up for Steve Bigelow's free room access, for example. What we'll do is Steve will actually email you instructions early next week on how to take advantage of all of those different bonus offers. Steve, if it's a Candlestick Forum, if you took advantage of Vince's special offer, who's coming right up, he'll send you an email early next week with instructions on exactly how to get involved with those bonus offers.